Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining me is Phil Mackintosh, chief economist at Nasdaq, for an update on the latest COVID-19 news, the U.S. and global economies, and how investors are modeling out the impact of the coronavirus. And today we're going to talk about how America could potentially compare to other economies that have already opened back up, and to also discuss health versus getting Americans back to work. And Phil, the unemployment data that was released this morning only adds to the tens of millions of Americans that are out of work. So clearly that need to get back to work is really front and center.
Yeah, the continuing claims at 25 million is still way off the charts, and it gets to sort of an unemployment rate which is around about 17%. The forecast for the official unemployment rate are now getting up to 20 and maybe above 20%. So, I mean, this has never happened since the Depression. It's a much bigger unemployment problem if we can't get the people back to work than any of the recessions we've seen before. And that's why I feel like right now a lot of the questions I'm getting are about how do we get back to work and what's it going to look like in 3 and 5 months.
Right, and that really is the question. If we take a look at our first couple of charts here, comparing to what Germany has done with testing and tracing versus Iran, which hasn't done that, and we can certainly see that in the data.
Yeah, and as you said, like a lot of countries are already going back to work, so we can learn from that. We don't have to be the first ones trying all this stuff out. Both of these countries started going back to work about a month ago. You can see from Germany's data, I mean, a month is plenty of time for the incubation of coronavirus, for people to end up in hospitals or end up being tested for it. So by now in Germany, we should have seen a spike in cases if that was what was really going to happen. And we really haven't. I mean, they haven't got the curve down to zero like China looked like it did. Although there's some news out today that's indicating China might have much more cases than it's got publicly disclosed. But in reality, Germany looks like it's doing the right things, getting people back to work slowly and safely without triggering new cases. Iran is kind of the complete opposite example. It's a case where you can see they've had pretty much 3 separate spikes. The spike in May, you can see the rate of growth is pretty close to how they started. So they've got the exponential growth rate in new cases back. And the difference between the two really is the testing and tracing. So testing people, knowing who's safe to interact with, pulling the people that are testing positive out of society and getting them to isolate on their own without everybody else having to isolate just in case. And then tracing the people that they've touched so that you test the right people with the limited amount of tests that are out there. And I think that's a really good lesson for us to learn from as well. We need more testing. We need more tracing. As we're about to open up our economies, we don't want to be Iran. We want to be Germany.
Well, Phil, I think part of the issue is, too, we can't quantify just how dangerous COVID-19 is. Global cases past 5 million, deaths approach 330,000. If you look at that simple math, the mortality rate looks high, but you also have to dig a little bit deeper into the data.
Yeah, I mean, the mortality rate on those simple metrics is over 6%, which is pretty close to what you saw with things like SARS and MERS, the 10 to 20% death rates. It's even, I mean, 10% was the death rate for the Spanish flu, which is kind of the worst case scenario people look at in terms of millions of people dying. But that's the problem, is no one has done enough testing to know whether all of the positive cases in the denominator or the divisor of the formula are in there. And at the same time, we also, even using that math, don't know the people that have not yet recovered, because it takes 3 and 4 weeks for people to contract this to recovery time. So the lag, there's actually been 1.8 million new cases in that period. The lag of the actual deaths could be still catching that up. So no one has a clue what the actual death rate is, which makes it really hard to see whether this is a serious health risk and a big problem for society or not. So some of the things we can look at, and one of the charts we've got today, is just looking at the average death rates, week by week, month by month. And you can see almost every country in the world with coronavirus has a huge spike in deaths. In the US, it's about 25 to 30%, it's about 50% above average. So 25,000 extra cases. Coronavirus is killing more people than heart attacks or cancer. So this is a serious health threat. It's not made up, and it really does exist.
Yeah, and if we take a look at our next chart here, this is where you're weighing in health versus opening up the economy. And you could see, with Sweden and the US with a little bit more relaxed social distancing, those rates are certainly higher.
Yeah, I mean, it's really difficult to just compare the raw numbers because obviously Sweden has a lot less America, and the US has a lot more people than the UK, and all of these different countries are different sizes, different numbers of people. But what I like about this chart is it's looking at the daily deaths per head of population, and so the countries where, for whatever reason, quite a large percentage of the population is dying from coronavirus are at the top of this chart. And that gives you a better idea of just how well the countries have kind of protected their citizens from the risk of death. And the US and Sweden and actually the UK are all up there in the top sort of 4 or 5 countries. And they're the countries that have stayed pretty open and pretty mobile. A lot of the countries that are down the bottom have had faster lockdowns, more serious lockdowns. And so you can see the trade-off. We know that the opposite side of the trade-off is economics. So the more you lock a country down, the more your GDP, but we have to kind of factor that trade-off in as well.
All right, if we take a look at our last chart of the day, we like to always end on good news for NASDAQ anyway. We can see that NASDAQ trades New York Stock Exchange listed stocks better than New York Stock Exchange.
Yeah, and actually at the moment, we're trading the New York listed stocks more than the New York Stock Exchange intraday. So a lot of people don't realize that any stock can trade on any market. So during the day, we trade New York listings and they trade NASDAQ listings, and there's a bunch of other exchanges and dark pools that trade both our listings. So this is something, we obviously compete for their listings to trade, and we compete for our own listings as well. But since the floor is closed, the market share of New York trading its own listings has been falling, and we seem to have been picking up some of that market share. So there's a lot of liquidity in the New York names trading on the NASDAQ right now. The reason for that is actually, the way that we set our market up with competitive market makers. We've got quite a lot of people competing for the bid and the offer. We don't have a DMM that's kind of given exclusive rights and privileges that makes it a little unfair for everybody else. And so we actually find that we are at the inside quote on the New York listings more than the New York floor brokers are. So I think that's contributing to the fact we're at a better quote, so we're doing more of the trading in the New York listed stocks. And it's also good to see the market's quality for our own stocks is even above that.
All right, Phil, thanks so much for joining us on Trade Talks.
You're welcome, Jill.
And thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.